Something was wrong at the Bored Ape Yacht Club, a year-old NFT collection owned by blockchain startup Yuga Labs. The company's most recent debacle includes its Other Deed for Otherside collection, an NFT-related gaming project that resulted in buyers paying thousands in botched transactions before becoming fraud targets once again. Stay tuned to find out what went down and what they had to say about all of this. Trust us, you don't want to miss this. In very recent news, Yuga Labs has finally apologized after their botched sale of virtual land that completely and utterly overwhelmed the Ethereum blockchain. After the auction of metaverse land generated a frenzy that temporarily overloaded the Ethereum cryptocurrency, a multi-billion-dollar cryptocurrency corporation has finally apologized to users. Just last week, Yuga Labs, the company behind Jimmy Fallon's and Paris Hilton's favorite Bored Ape NFTs, announced the launch and sale of its latest tokens, which represent plots of land in an upcoming multiplayer game titled Otherside. A total of 55,000 plots were purchased for a set price of 305 ApeCoin, a Yuga-created currency, which is roughly 4,500 pounds or $5,500. The demand for the plots was so large that it completely overloaded the Ethereum blockchain, which is one of the infrastructure layers that pretty much all cryptocurrency ventures rely heavily on to function. As users fiercely competed to be one of the few who could own an Other Deed, transaction fees on the network skyrocketed to the point where a single NFT purchase cost more than 2,500 pounds in fees alone. Others, however, were not so lucky and have lost thousands. Simply put, if a user runs out of money while paying the insanely high transaction fees, the transaction will obviously fail, but the cost for fees, etc. will not be returned. The outrageous costs paid by the majority of individuals who purchased Yuga's latest token have paid off, well, at least in the short term. Tokens that sold for 4,500 pounds are now reselling for more than 9,000 pounds, double the profit. However, those who are unlucky enough to be conducting other Bitcoin activity at the same time have suffered significant losses. Over $100 million was paid on transaction fees in order to purchase Otherside NFTs, with Yuga Labs receiving another $300 million in payments. The corporation apologized for the confusion it had caused after the sale was completed. Due to the Other Deed sale, the company had already experienced one crisis. A phishing effort involving $3 million in NFTs was launched after a bogus post on its hacked Instagram page advertising free metaverse land. Some speculated that the repercussions of such a minor sale demonstrated that the cryptocurrency industry would struggle to scale to deliver services to the mainstream public. In very similar news, Ethereum NFT prices plummet as crypto market crashes. As the NFT market bleeds red with crypto prices, buying an entry-level Bored Ape today costs 55% less than it did just 10 days ago. While NFT market activity has appeared to be uncoupled from crypto prices at times in the past, particularly when NFTs soared as the crypto market fell, this is not the case right now, with crypto prices plummeting across the board this week. Over the past couple of days, the floor price for many of the most valuable NFT projects has dropped by 20% or more in US dollars. Most large projects are down significantly, even when denominated in Ethereum. The Bored Ape Yacht Club, CryptoPunks, and Moonbirds are among them. The cheapest Bored Ape is currently up for sale for 86 Ethereum, just over $194,000, with Ethereum at its lowest position since July 2021. Meanwhile, CryptoPunks are down 21% to almost 114,000 or 50 Ethereum today. Moonbirds are down 34% to $39,000 or 17.1 Ethereum, and Azuki NFTs are down 23% to nearly $40,000 or 17.45 Ethereum. This is certainly concerning for crypto and NFT owners. However, this is very common with the digital currency and token world, as prices are very susceptible to unpredictable movements. The big question everyone has is, why should you invest in NFTs? First things first, non-fungible tokens, or NFTs, have been trending on the internet for over a year now. The size, intensity, and speed with which the NFT industry is growing has startled everyone. As the excitement surrounding NFTs grew, so did the number of wallets purchasing NFTs, the amount of NFT transactions, and the prices of various digital artists. So why should you invest in this new digital phenomenon? Well, NFTs are insanely profitable. These digital unique tokens have attracted the attention of investors for a variety of reasons. However, the most appealing aspect is their potential for profit. Most people are investing in NFTs because of the chance to make a fortune, and they're intrigued for a reason. People have already made insane amounts of money flipping and trading their digital assets online in the NFT market. In addition to being profitable, the underlying blockchain technology gives collectors a more precise confirmation of authenticity and originality, while giving artists more control over their work throughout its existence. Each token on the blockchain has its very own transaction log and verifiable metadata, which can be used to establish ownership history. The blockchain is a database that contains a complete list of transactions, and the entries on the blockchain may be trusted because they are extremely difficult to alter. This ensures the validity and uniqueness of your token, which is a must-have feature for any collectibles market because it eliminates the risk of forgeries. So, as you can see, there are some really awesome pros to investing in NFTs, as they are completely unique and extremely profitable. In our last crypto news story, two of the most popular cryptocurrencies have been tanking rapidly. Bitcoin and Ethereum have both plummeted more than 10% in the last few days, with Bitcoin falling below $30,000 for the first time in close to a year, and Ethereum is currently hovering around $2,200. In a recent TikTok video, a crypto specialist thinks Bitcoin could possibly receive a mini bounce near $35,000, but unless we break the trend line at approximately $37,000. Otherwise, they're predicting for $29,000 in the coming week or weeks. Bitcoin and other cryptocurrencies have had a rocky start to the week, owing to persistent macroeconomic uncertainty. The cryptocurrency markets have been closely following the stock market, which has recently been in the red. Stocks sank dramatically on Monday as the market sell-off continued, following the Federal Reserve's announcement last week of the largest interest rate hike in over 20 years. The crypto market, like the stock market, has been under pressure for weeks as investors deal with rising inflation, a whirlwind of economic events centered on Russia's invasion of Ukraine, and the Federal Reserve's tightening of monetary policy. Bitcoin began to decline towards the conclusion of last week and continued to do so over the weekend. Bitcoin's massive decline is just the latest warning for investors that digital assets carry additional risk and volatility, especially in times of economic and political uncertainty like we are experiencing now. On a similar note, Ethereum has dropped 18% in the last week after a significant drop in Bitcoin and the stock market. Ethereum, like all other cryptocurrencies, tends to follow Bitcoin's path. If Bitcoin falls in value, Ethereum is likely to follow suit. However, Ethereum has been dealing with the build-up to its big software upgrade. Ethereum will transition from proof of work, or POW, to proof of stake, or POS, in the coming months, popularly known as the merge. It's significant because it will alter the way Ethereum transactions are processed, making it more efficient and long-term, which will also hopefully give it the boost it currently needs. So, what should you know about investing in cryptos, especially in today's world? First things first, cryptocurrency values are incredibly volatile. That means they're just as likely to collapse as they are to rise. And experts warn crypto investors will have to deal with this in the future. The recent losses in Bitcoin and Ethereum shouldn't worry you, as long as you're only investing what you're willing to lose and have a long-term investment strategy in place. Most financial gurus advise investing no more than 5% of your overall wealth in cryptocurrency. Prioritize other elements of your finances before investing in cryptocurrency, such as saving for an emergency, putting aside money into a retirement account, or paying off high-interest debt. It's no coincidence that the crypto market has been behaving more and more like the stock market recently. According to experts, increased institutional use of cryptocurrency has made its market increasingly interwoven with the stock market, which has been significantly impacted by the economy recently. These macroeconomic variables have caused some noise and increased volatility in the crypto and stock markets in the short term. But this is normal in times of uncertainty, with many experts believing that it will shoot back up in no time, like it always seems to do. And there you have it, everything you need to know about Yuga Lab and what exactly went down after the sale of virtual land that went completely wrong and the company's unavoidable apology. So have you invested in any NFTs? Are you a crypto fan? Do you think it's here to stay? Let us know in the comments. Thank you for watching. Comment.